Welcome, Mr. Phillips.
Thank you, Jacqueline.
You're here for a couple of days in New York. Let us know who you're going to go see.
Well, in addition to some of the folks here, we've taken the opportunity to get out and see a variety of investors, some in the private equity space, some others. We're hosting with the consulate a roundtable with some AI companies that are, some are active in Toronto, some are not. As a lot of the folks in the room here will know, Toronto has quite a strong presence in that business, and so trying to capitalize on that. But lots of people to see in New York.
Great. So let's dive right in and have a look at the deficit projections. I've got a chart for that. They've been bouncing around quite a bit, but last week you did say that you expected Ontario to beat the deficit forecast you had for this year, which was $10.3 billion. What kind of a beat are we looking at?
Well, we'll have to wait. November 6th is our fall economic statement, and as those of you who watch our economy closely would know, we have, as a result of some of the changes I think that we've made since being elected a year ago, June, seen some very positive turns. About 280,000 new jobs, and all that employment and activity has generated some additional revenue. We saw that in the last year's numbers, in the 2018 numbers. But you know, at the same time, we're looking at the areas from a public service perspective, whether it's healthcare or education, that require investment as well. So we'll have that update on the 6th. But what I was able to say last week is that we're gonna be able to beat that 10.3. And as was mentioned in the introduction, we have set a timeline of 2023 to balance the budget. It was very politely put, but we are a significant sub-sovereign lender. This year, somewhere in the neighborhood of $36 billion that we'll be in the market for, and that you know, that requires that we have a kind of transparency that I don't think we've had at least as much as we think we should have in the past.
Right. So given that things are improving quicker than expected, do you think there's a possibility you could get to eliminate that shortfall ahead of that target as well, 2023, 24?
You know, we're really focused on a very prudent plan, and so on that time horizon. As all of you know, from your backgrounds, when you're dealing with challenges from a money perspective, they need to be dealt with deliberately. But at the same time, we have, you know, significant commitments around things like infrastructure, significant commitments around fixing elements of our healthcare system that need to be fixed, our education system. Those all take investments as well. So it's a prudent plan, and we're committed to that 2023 timeline.
Okay. So you mentioned the 270,000 jobs that have been created since last June 2018. What are some of the other elements that are helping the economy roll along quite well at the moment?
Listen, I think there is an aspect of confidence that comes out of some policy changes we've made. We've committed to getting rid of 25% of the regulation by the end of next year. We have reduced the tax burden on both individuals and on businesses to the tune of tens of billions of dollars over the next number of years. But obviously, we're also beneficiaries of the strong economy in the United States. A lot of people don't realize this, but if Ontario was a standalone country, it would be the third biggest trading partner for the United States. We're the #1 trading partner for 19 states and the #2 trading partner for 9 other states. So to the extent that we've seen a lot of activity coming out of the United States, that's obviously helpful. It's been helpful as well to see a lot of the tariff issues that were previously challenges resolved. And you know, we have some specific drivers. Our housing market, certainly the agribusiness market has been quite strong lately. I mentioned AI and biotech. So there's some sectors that are particularly driving growth, but you know, we still are, when you aggregate it together, you know, seeing that sub 2% overall economy that a lot of us are experiencing, and we're having to manage the public purse in that way.
I mean, you point to that. I mean, given that we've had this huge surge in jobs, you're not getting as much bang for the buck as you have in previous years, I imagine. Do you think that Ontario has, in fact, slipped down into a slower growth trajectory, the same as Europe, for example?
Listen, there's no question that ourselves and the other advanced economies are being affected by that growth trend. Obviously, we're trying to do the things we think we need to from a policy perspective, in particular providing certainty for investors and business investors so that they'll see Ontario as a place to put their dollars. But we are very much subject to a lot of those global trends, which is another reason why we're so focused on that path to balance. I think that kind of prudence, right now, we don't see a lot of it, in my opinion, either here or necessarily from at least some other governments in terms of focusing on getting a handle on debt and deficit. But our belief is that that'll pay off in the long term in terms of providing stability and certainty, so that investors will see progress on that, and of course citizens of Ontario. I mean, it's their debt, and we have to treat it seriously.
You did. Dave mentioned in the intro GM reaching a tentative deal with its auto workers. That's not going to really change the fact that Oshawa is still going to be closed down in terms of assembly at the end of the year. What's your overall outlook for manufacturing in Ontario, which has been declining so much as part of the economy?
It has been a challenge. Over the last number of years, Ontario lost 300,000 jobs from the manufacturing sector. At the same time, we saw some growth in other sectors. But part of the investments we've made, for instance, the accelerated capital cost depreciation that was part of our last budget, seemed to be bearing fruit in terms of investments in plant and equipment. So we're conscious that we are, as I said, a trading partner with many U.S. states, but many of the states that people choose, when they're looking at an Ohio or a Michigan or a number of the border states, they're all strong competitors in terms of investment in things like auto, and it's an important foundation of our economy. So I think we're doing the right things in terms of making sure that the environment is there for investment. We are still, as far as I know, the only sub-sovereign jurisdictions that has still 5 of the large car manufacturers represented there, in addition to all the parts manufacturers, and that's a real asset we continue to build on.
Okay. So let's talk to the cost side of the equation in the budget balance scenario. How do you feel that things are going along in reining in some of those costs?
One of the things that our government did out of the gate was a line-by-line review of all of the expenses that the government had. We got Ernst & Young to come in and have a look, and it pointed to a number of opportunities. It pointed to some very big opportunities in the space of procurement. It pointed to some very significant opportunities in terms of some of our major systems. How do we, effectively manage the continued growth, because we are continuing to invest in our healthcare system. But when you have a healthcare system that is $64 billion of a $160 billion budget, that's obviously a very important component that you need to make sure that you're maximizing the effectiveness of, both from a healthcare perspective and a cost perspective. When we looked across the way that infrastructure investments have been being made, what we found was that quite consistently commitments were being made but that not followed through on. And that was having the dual effect of being inefficient, because we were in some cases borrowing for builds that weren't happening until later, but we were also not being as effective partners, and we have quite an effective partnership model, the 3P model that involves an important role for the private sector. But when you're not delivering on a timely basis on your commitments, then you start to make that market work less efficiently. So we found a number of those features, and then right down to as famously getting rid of the landlines in a lot of our offices that were literally costing thousands and thousands of dollars. And I don't know how many of you have employed a millennial lately, but normally you have to explain to them what that's for, that thing on the desk. So anyway, some also smaller things and some bigger things. And what you're going to see, and Doug Ford, our premier, comes from an industry in the printing business, in an area where continuous improvement was an expectation, where lean approaches were an expectation, and that's really what we're trying to institute inside government. Not easy, lots of work to do, but we believe there's still some efficiencies to gain, and that lets us reinvest in the critical service areas and get that deficit and eventually that debt under control. But
the big ticket item is always labor, right? You did manage to keep the educational workers to 1% raises, but you've got negotiations with the teachers coming up, which seem to me might be a little harder. They've already said they want some of those class sizes increased again, and they want a cost of living increase. What's your message to them?
Well, we have an excellent education minister in Stephen Lecce, who I think has made the point, and I'll just reinforce it, that our focus is on making sure that the children in our education system and their parents are getting what we need in terms of a quality education. And Minister Lecce is very involved in terms of making sure that as we negotiate with our labor partners, and you're right, we did quite successfully negotiate with 55,000 education workers from CUPE, and there's more negotiations underway. But that message is still the same, which is that we're going to focus on what's best for the kids and keeping them in class, and making sure that we're getting the kind of quality education that we need for a modern economy. As all of you know, who follow what happens in Canada, and particularly in Ontario, one of our great advantages is the people that we can provide, the human resources we can provide, and our education system is an underpinning of that, as well our post-secondary education system. So there are areas that we need to invest in, and obviously we need good partners in our teachers, and I'm confident in Minister Lecce.
So you expect to keep to the 1% cap that you're going to you have in place?
We won't negotiate on Bloomberg, so
No.
we'll let them. We'll let the negotiations happen where they should. But we do absolutely understand that that one of the advantages that we have, and I'm here in New York, as I mentioned, talking to a number of people who invest already in Ontario, some who want to. A consistent feedback we get is that the quality of the people that they can hire, whether they're coming out of high school, coming out of post-secondary, coming out of our training programs, that's one of Ontario's competitive advantages. So we're gonna keep investing in that, and we'll have good partners in the education sector to do that.
So one area where you're probably not getting as much revenue as you expected is from the cannabis industry, given the slow rollout of stores. Why not just scrap the lottery system and let the market dictate where the stores should be and how many there should be?
Well, that's actually the decision that we made, which was different than the previous government. The previous government had made the decision to have a government-run, government-operated distribution system for cannabis. We made a different choice, which was to have a private sector-driven model. There were significant supply issues initially, which I think have now been largely resolved. But initially, the ability to make sure we could supply those stores was a priority. We obviously, particularly because we want to be a place that is sympathetic to private business, we didn't want people opening up stores that couldn't be supplied. That situation has worked its way through. In the meantime, we've used a lottery system, but we're moving as quickly as we can to what we'll call an open allocation system, which will be an more open market. The Ontario Cannabis Store is the process now of actually consulting with a number of the producers in terms of how to most efficiently do that. So we are very focused on obviously safety in terms of how distribution and the availability of cannabis is rolled out in Ontario. We are very focused on combating the illegal market, and we believe that in the medium term this is the right strategy to do that. But we will we're going to be purposeful about making sure we roll out that distribution, make sure that we can supply those stores, and we'll be have more to say about that as it unfolds.
So let's just quickly turn to the borrowing situation. I think we have a chart for that as well. You borrowed about $20.4 billion out of a projected $36 billion, mostly Canadian dollar, US, and a little sliver of Aussie dollars. Do you think there will be a Euro bond in your future?
We're committed to making sure that we have a balanced portfolio in terms of where and how. We are, I think, targeting around 70% domestic and 30% coming from foreign sources. Obviously, most of those foreign sources are going to remain US dollars, but I think it makes sense to look at diversifying the base of that debt. If you go back to 2007, 2008, there had been a bit of a purposeful constriction of that, so it was more focused on Canadian only, and we just think the markets are quite open to us. We're borrowing at very effective rates. This year, we're going to borrow roughly 1% lower than expected, and again, that's not a thing we have to do with in particular, but it is to the benefit of the public accounts. So we'll keep that diversified base, and if that looks at other currencies as well, then we'll look at other currencies.
What about extending the terms? It's so cost efficient to be going to 50, maybe 100-year. How about that?
Well,
Century bond for Ontario.
I'll leave that for our folks who deal with the market. But listen, the availability of longer money is something we've been taking advantage of. And as the spreads narrowed, it's just made sense. And as I mentioned, we do have a considerable amount of refinancing. Plus, we have just in the area of transportation a $90 billion infrastructure spend over the next 10 years, another $17 billion in healthcare, another $13 billion in education, all in terms of revitalizing that vital infrastructure. So as people who are going to be in these markets for the long term, we want to take advantage of what makes sense.
Okay, so we've got a few more minutes left, but my two more questions. Obviously got the election next week. Who would you work better with in the next with the next after next week? Who would you choose to work with if you could?
Well, listen, we will always work with whoever is focused on good things and the things that need to be done in the province of Ontario. It's interesting. I'm quite familiar with the current finance minister just because we used to work together. He was the Chappelle part of Morneau Chappelle was a company that I was an owner and the CEO of. So there's a relationship there, but we'll build a good relationship with whomever is in government. We had some good news today, just as I was coming in, where we had Mayor Tory at the municipal level, a very important partner, talking about enthusiasm for the transportation plan that we've put forward in Toronto, in the Greater Toronto area. That's good news. I think people really do expect that we as a government will work with whoever is there, and I guess we'll find out. I listened with interest to Mr. Nanos's comments earlier, but I think we'll listen with interest to who's going to be the government this time next week.
Okay, and so the question for everyone we've been asking is, what are the chances of a recession in Canada in the next 12 months?
And the only person who's absolutely not to use that word is myself and my two colleagues listen, we're very aware of where we are in the economic cycle, but what we have the accountability to do as a province is to make sure that that we're accounting for whatever situation. I mean, there is a lot going on in the world today. There's whether it's coming out of the United States and the issues with China, or whether it's Brexit. There's a lot of variables that we don't control. We're focusing on the things that we can control, making sure we have the skilled workforce, making sure we have the infrastructure investment, making sure our public finances are in proper shape, that they are able to withstand some uncertainty if it comes. And we will see. But I do have a funny story if we have a minute.
Okay.
It is interesting as Minister of Finance, as you would expect. I'm reasonably new in the job. I think I was about 3.5 months or so ago, and so you get the benefit of fabulous briefings from some of the smartest people in our country. I would say even in the world around economics. And one of the things that you hear as a reoccurring theme is that you need to be careful about what you say, because you could be here on Bloomberg and say something and something could happen. And so after 3 or 4 suggestions that I needed to be careful, I leaned over to my deputy who's here today, Greg, and I said, Greg, what is it specifically that I know that someone else doesn't know? Because if you tell me what that is, then I'll be sure not to mention it. And Greg smiled and explained to me that it's not necessarily that you know that much more, it's just that it's important that other people think you do. So I wouldn't want to burst that bubble here on Bloomberg today.
So you're not giving me an stare, right? So no recession?
We'll be prepared, and our finances will be in the kind of shape they need to be, so that that Ontario can weather any situation.